All right, guys. So on today's episode of Unlocking Silicon Valley, we got a lot of great topics. We're going to talk about the canary in the coal mine. We're going to talk about terrified, my new favorite word. And then we're also going to talk about when high-end home buyers stop buying, is that an indicator for the rest of the real estate market? So
awesome. Let's go.
As G would say, happy podcast day.
Happy podcast day.
Happy podcast day.
Another episode of Unlocking Silicon Valley. And today I want to start off with a new word, terrified.
Love it.
Right? I mean, it seems like there's a lot of upheaval, especially in our valley, because a lot of our wealth in our valley is tied to not just tech companies, but tech stocks, right? A lot of the buyers that we're working with, their stock portfolio has dropped, which typically means the amount of down payment that they're able to put and just really the confidence that they have in their own jobs and their own portfolio long-term has kind of got them rattled. So I know, G, you're going to break down some tariffs and what's going on in our government and possible reason behind it, and what advice, we can go around the table here, but what advice should we give to our clients during, this type of climate?
Yeah, I mean, Trump is leading this thing in the same fashion as what he mentioned in the art of the deal, right? Where you go ask for a crazy ask and then come down and you have a more reasonable ask that's more agreeable upon, right? That's a classic art of the deal negotiation strategy. That's what one of the theories is. And once these tariffs get imposed, that creates economic pressure, which leads to interest rates to drop. That will allow U.S. to refinance their national debt. Eventually capital gets cheaper to borrow, and then businesses expand and growth emerges as a result. And then there's a lot of opportunities around that, and eventually economies boom. So that could be a short-term pain for a longer-term gain.
All right, so my economic professor, when is all that going to happen?
I think it could be, the timeline's what sucks. No one knows when this is going to get laid out, right?
Okay.
But this whole thing where he came out and said that the 90-day pause, except for China, has really gotten the stock markets to rally. Buyer confidence has come back into the market. I know some of the deals that we were looking at and analyzing, especially between April 1st and April 4th, there was just a lot of buyers reaching out saying, recession's coming. It's all doom and gloom. We want to back out of contracts. We want to renegotiate. People's portfolios tanking 20-30%. So there was a lot of turmoil in the industry. And I guess just that 90-day pause has kicked the can down the road and gotten people to at least feel certain for the next 3 months. So 3 months later, I think we'll have some more idea about where this is going.
I think the challenge that we have is residential is such an emotional purchase, right? That people freak out when they hear these things. I mean, Wall Street Journal just came out, $million dollar buyers are walking away from transactions like they haven't done since 2008. I know we've seen a couple challenges like that here in our world, but I don't see this like 2008.
Yeah.
I mean,
and actually I was going to ask you that because, you and I have been doing this a long time. And, maybe you can speak on this, but typically we see the slowdown at the high end first.
Right.
And then it trickles down.
Sure.
So are we seeing, I know you just mentioned that, Wall Street Journal article, but in our market, are we seeing the high end stuff slow down yet?
No, I mean, there's still so much money in this valley that we're not. It's like we always say, we're recession resistant. We're not recession proof, but there's still so much money out here. And it's such limited product that the people with money are still going to buy it. Now they might use this situation as a negotiation tool, just like Trump's used. It's a strategic move.
It's leverage, right?
It's what it is. The sky's not falling, and the chicken littles that want to run around and say that it is, I just don't buy into it.
Yeah, that's always been the canary in the coal mine for me, right? And if either of you know what that means, youngsters, youngsters, if you even know what that means.
What is a coal mine?
What's a canary?
Talk to Trump, he'll show you.
Yeah. Well, I'll let you guys research that later. But speaking to our slightly more,
Speaking, I'm sorry to interject real quick. We're talking about the age differences. Stuff. I was at the gym today and I was talking about how we're going to go see AC/DC, and literally my trainer was like, who? I don't know. I think my parents used to listen to that. I was like, oh my God. It's like a canary in a coal mine. You don't know what that is.
Yeah. So
no way. Are you serious?
I can't tell you how they even get connected to each other.
All right. Well, I'll finish the story and then maybe we can talk about it. So the canary in the coal mine, typically in real estate in our market, is when high-end homes sit. because the people with money, when they stop spending, especially on housing, then that's typically a sign, from the top.
It's the first indicator of a recession.
Yeah, or just some sort of slowdown,
Right.
For our real estate market. And to Mark's point, I haven't seen that yet.
I haven't seen a slowdown. I have seen the higher end market, the buyers in the higher end markets start to become, and I've been saying this, they're just becoming more picky. I think with higher end homes, 4 million above, we just don't have that much inventory.
Well,
so the ones who are looking, they keep their money stashed in the stock market longer, hold it, and wait until they look. So I see them I see them really focusing on the 10 out of 10 on their list. They're not going to budge for anything else. If they're going to take the money out of the stock market right now, it's going to be for that 10 out of 10
the right house.
But again, it's not enough inventory. So
well, although I'm seeing inventory creep up on us, I am. I mean, Los Gatos, where for the last year or so we were floating between 25 and 35 homes active on the market. We're now almost to 60. Which may not in the grand scheme sounds like a lot, but at the height, Los Gatos is around 85 to 100. That's a lot of inventory for Los Gatos. So we're getting to 60.
Yeah, and it's not even June yet.
Yeah, right. And I think a lot of it comes to play, though. Jeet and you and I were just talking about that, where somebody sees a house, Poppy Lane, for example, that, just dirt value, 8,000 square foot lot, 20 offers, sells for 2.5, and it's a 1,200 square foot, 8,000 square foot lot, and the guy down the street who has his 2,500 square foot home. Oh, damn, if that thing sold for $1,200 a foot, I got to get $4.5 million for my house, right? And I think that's where you'll see some of these homes sitting out there a little bit longer. But the ones that are priced right, that have the value and the wow factor, will still fly off the shelf.
Yeah, and I will say, Mark and I have met with quite a few Los Gatos sellers over the course of this year, over 2025. And a lot of them have some pretty aggressive pricing that they're trying to obtain.
We got one we're going to tomorrow, man. I mean,
yeah, and it's just, I think, and it always lags, right? Sellers are always looking at what happened, last year and anticipating they're going to get that for their home, when the reality is our market moves pretty quickly. And so it'll be interesting to see. But again, if you are a buyer looking at condos and townhomes, it is a great time to buy. Right. I mean, the amount of inventory for condos and townhomes right now, from what I've seen, especially this time of year, is at a near all-time high. So if I'm a low end, entry level, $600,000 to $800,000 condo or townhome buyer, I would go in and leverage a great deal right now.
Yeah, I have a great one coming up on 1544 Alma Terrace, 2-bedroom, top floor unit, high ceiling. So if anyone's looking,
what are the HOAs?
It's about 490.
That's not bad.
That's not bad.
Good balconies.
Yeah,
great
good balcony.
And what are you going to come on the market at? What's the price point range?
725.
Damn.
So get into Los Gatos schools?
No, that's Willow Glen.
Oh, Willow Glen. Oh, okay.
Willow Glen.
Willow Glen, close to downtown. You can walk to it.
Doesn't Aaron have one that's like 1,500 square feet, 3-bedroom, 2.5, or 3-bedroom, 3-bath for $699?
I think it's like right behind like Communication Hills.
Yeah.
There, yeah.
Rent for $4,000 a month. I mean, there's some good buys out there. There are, right?
We're in an area where it's going to continuously have good buys, and it's like we always say, many markets move up and down on a horizontal line. We move up and down on a
roller coaster,
upward vertical line.
Yeah.
I guess even if it goes down, we're going to come right back up.
We've always cycled. We've been on this 13-year run right now. It's been straight up. You go back to 1940, it's 8.8 a year appreciation, and you go back as long as you want. And that's exactly what it is. Where national average is 2.3.
Okay, so then is it a good time to buy?
Absolutely.
I had about 10 to 20 calls with buyers over the last week. Half of them that are like, "Hey, we are sitting on cash. Should we move now?" And the other 10 are like, "Hey, our stock portfolios have taken a hit. What should we take a slight pause?" Right. So I think it's a 50-50. People with cash that already have money out of the markets. It's a great time to buy because you can say that you're impacted by the markets and try and get a good deal.
Yeah, use it for negotiation.
So then on the flip side of that, is it a good time to sell?
Absolutely. Absolutely. No, 100%. We only know what the market's doing.
I don't disagree.
I can tell you, every time I bought a house in this valley, I thought I was overpaying for it. And 5 years later, made tons of money off of it.
Yeah.
Every time I've sold, I just sell because that's amazing. Like you had said, where like the people who you felt like have money, they're looking at that 10 out of 10 scenario, right? Every time I've made a decision to buy or sell, I'm going to buy or sell. Yeah. I'm not going to be that seller. I think we got one right now that we're dealing with. Well, if I can get this number for it, I'll sell. Yeah. There's nothing driving that person other than the greed factor of how much money they can make.
Yeah.
Right. But, I know what the market's doing today. So I've been in so many scenarios. We got a client that you've been looking for 3 years. She could have probably made $500,000 if she bought something 3 years ago.
$1 million.
Right. And vice versa. I mean, listen, as much as, I'm strong about where the market is going and optimistic. I mean, obviously long term we know it's great. Listen, there's a potential that if the market shifts 10%, which isn't a big shift,
right.
But you look at somebody who's looking at pre-retirement and stuff. They're sitting on a $3 million house. Well, that 10% shift is $300,000 they're giving up.
Right.
So listen, we know what you can sell for today.
Yep.
And we still have a great environment, right? Low inventory, great desirable quality of life where we live and everything. So yes, I believe buying or selling, now is the time to do it.
All right.
We are still at the peak of our market. I mean, if anyone bought 10 plus years ago, they've bought it for less than $1 million, and they would net over 3. Right?
We were just talking about the property that Aaron and Jason had, where it came on the market at 3.5. They get offers at 3.8. Not naming the property. Seller
wants 4.
Wanted 4. Sure enough, this is why I don't advise doing multiple counter offers, because sure enough, you create that bad will scenario where buyers already know they got to come in with their best foot forward. They decide to walk. Now you're chasing offers. Long story short, they wind up selling for $3.3 million. So you might say, oh my God, the guy lost $500,000. But the guy probably he's been in the house for 20 years.
He bought it for $1 million.
Bought it for $1 million.
Yeah.
More than doubled.
Yeah.
Tripled.
But he's at 3.3.
But also,
come on.
But also greed.
And I'm sorry.
Cost him $500,000 in a week.
Yes. But also at a certain point, you're in partnership with the government. Yeah. Right? When you start hitting over your exclusion. So, don't get too greedy.
There you go. Good moral of the story.
Yeah. There you go.
Yeah.
All right.
Benny.
Yeah.
What do you got? What are stats? We got any stats or anything?
Yeah, what's the stats? Big D?
Oh, what happened to Mustache Market Minute and stuff?
Mustache Market Minute.
Well, he doesn't get a Mustache Market Minute. I do the Market Minute.
Okay.
Oh, okay.
But I didn't bring stats today because, one, we cover stats on just about every podcast, and two, I mean, inventory's up. It's right. I mean, but I could sit here and say, and this is true, inventory is up 10% over a month ago. But what's 10% of 600?
Exactly.
60 units over the entire county.
Although, I mean, the only thing I'll point out, and I 100% agree with that, is that we are sitting with the highest inventory levels we've had in years.
Yeah, for this time of year.
This time of year.
If you look at year over year,
yeah,
absolutely.
I mean, it's so again. I mean, it's not a sky small. It's just is it an indicator?
Yeah,
I don't know.
I have a question.
Is it the canary?
Is it the
canary in the coal mine? But it is an indicator, because remember when interest rates jumped, nobody wanted to sell because everybody was locked into 3 and 4% interest rates.
Right.
But what has happened over the course of these past few years is people have recognized, look, rates are never going to come back down to that point in our lifetime.
And those adjustable rates are coming up.
And the adjustable rates are coming up, and it's like, you know what? We still have lives to live, and whether it's downsizing or moving out of the area, I mean, those life events are still happening, and so I think sellers are becoming more comfortable with the fact that this is the new reality, and that's why we're seeing those homes come up on.
They've also made great money since COVID. I mean, you bought even last year, 2 years, 3 years, COVID started. You're probably making $250,000 on this. And for those who are now, again, everyone's back at work. The commute it's a lot longer than what it used to be. So the people who are trying to move back in the area.
I would say that's the variable that we're dealing with now. Is it used to be it would be 5 to 7 years until you would see that money back, because anytime somebody buys, and generally speaking, if they sell within the first 2 to 3, they're going to lose because you're giving up 6-7% in just closing costs and stuff. So you have to have such a jump. But you're right. I mean, we've seen areas go up 20% a year. I mean, and COVID did nothing but just add fuel to the fire, and it's continuing to move up. And, I scratch my head that God bless you guys. That's why you guys do such a great job with buyers. I mean, as long as we've been in the business, I'll admit it's hard. I can do it from a seller's perspective. From a buyer's perspective, it's hard for me to go to a house that, we were talking about it today where, damn, I remember in the REO days, that house was $180,000.
Yeah.
And now it's going for over $1 million. Yeah. Or that house was $1 million, now it's going for $4 million.
But it just goes to show, it's like, that's why
long term it's golden.
Long term it's good, and for your own home, right? I mean, we could have a whole separate discussion on where it makes the most sense to invest. But for a house, to hang your hat, every night and to establish your roots in a community, there's no better place than the Bay Area. And it doesn't matter when,
Amen.
Right? What matters is just getting in.
Right.
And none of the political, some of it you can take into consideration, but truly none of it, I think, makes a difference out here. I think we beat to our own drum out here. I think when people feel it's right to buy and they can afford, they continue to do it. And when people need to sell, they continue to sell, knowing the inventory is low, and they still make it happen. Tariffs.
Yeah, I mean, the challenge when you talk about the political environment side of it, that's just when they start attacking certain tax advantages for home ownership. I mean, It used to be that we had unlimited write-offs basically for our interest rate, right? And then they capped it at 10. There was talk about getting away of or increasing capital gain taxes and not allowing to do 1031 exchanges and all these different things. So those are the things that kind of change things, but it takes so long to get those going. At least you have quite a bit of warning and the ability to kind of strategize as a group and see how, if it's something you want to do or not. It used to be that we had 1034 exchanges. You guys know what 1034 exchanges are? You ever heard that?
What's that?
1034 exchange allowed you to trade a residential property just like a 1031. Yeah. And the reason why they did that is you used to only have a one-time life exclusion for taxes. Now, what they did is they got rid of the 1034 because you can sell your house as many times as you want, as long as you own it for 2 years and have that. It's not a once in a lifetime exemption. Yeah, you get the exemption for primary residence at $250 per person, right? So they did away with the 1034. We were talking about Prop 19. It's Prop 19 now, right? Where you can, if you're 55 or older, you can transfer your property tax bases statewide, where it used to be just county by county. And, like Santa Clara County cooperated with it in the past, but Santa Cruz County didn't. Yeah. So if you had a house that you paid for $50,000 and now it's worth $2 million, and if you decided to retire in Santa Cruz, well, guess what? You couldn't transfer your property tax basis over there. Mm-hmm. So through political reasons and stuff, they were able to pass it through the whole state.
You get to transfer your property tax now if you're over 55.
If you're over 55,
just once.
It's not. There is a time limit, and I think you have to do it. I think it's within 2 years of you selling your property. But it's not a one-time thing. You can do it time and time again.
I thought you could do it multiple times.
Yeah, you can do it multiple times.
And then,
but you know what's even interesting about that is that not a lot of people even take advantage of that.
Well, they don't. But think about the people that are doing it. They're going to a location that they don't want to have to sell again. They're retiring. Yeah. It's their end all.
Is it the same rules with the county though? You sell a home in Santa Clara County and you move to Carson, Nevada. Are you
it's state of California.
State of California. Yeah, within the state of California.
Okay.
And I'll tell you, that is one of the huge. We talk about where the great places to invest, and I'll always say outside of California you get the best returns. Appreciation here is great, but for commercial, all that stuff outside of California. Yeah. However, the one thing California has going for it that most states don't is Proposition 13 that limits your cash flow. We look at all those properties that we've gone into partnerships in Texas where our cash flow has been killed because
we have one of the lowest property tax rates in the nation.
Absolutely. Which is rare considering for California.
And it can only go up by 2% year over year, whereas in some other states,
there's a cap that it can go up each year.
Yeah.
But like in Texas, there's no cap. Whatever that house appraises for. So when you look at an area that went from $250,000 on a house, 2 years later it's $600,000. Well, you're paying taxes based off of $600,000, which some of those areas are 1.8 to 3.5% in tax rate. Mm-hmm. So if you bought that house at $250,000, and the rental market didn't catch up to that, right? Yeah. In fact, if anything, it's retreated a little bit. So, yeah.
I have a question about tariffs impacting building costs.
Mm-hmm.
How do you see that affecting?
I was just reading an article where there was this issue about builders that were overbuilding and getting stuck on these projects. They are jumping up and down right now because those projects have already, all the materials already come over here and they don't have to worry about the tariff cost on it.
That's right.
And I know, I'm going through a major remodel right now, and every vendor we're dealing with, now I think it's more of a marketing ploy than anything. Hey, you better get it in by Tuesday because the tariffs are coming. The tariffs really haven't hit right now, and it's up in the air, right? But if I'm a large builder, I'm definitely going to
overstock on supply.
Oh yeah, I probably would.
Yeah, probably on some of the commodity stuff.
Yeah.
Yeah. I mean, I saw Apple ship like 5 ships to the US full of inventory so that they're good until the next release, so that the tariffs don't.
And if I recall, weren't we importing the most amount of steel from China? Wasn't it China's steel that we were bringing in, and you got wood coming in from Canada?
I believe so. Yeah, and it's all this stuff you don't think about. Canada, we actually import more fertilizer from Canada than any other country, right? So if you look at like all of our farmers, because they're saying, well, if you won't get a tariff if it's made in America, well, what they don't understand is the fertilizer, the feed, and those types of things, for the agriculture and the farming business, a lot of that stuff comes from other countries.
Absolutely.
Yeah. I try not to. I mean, I think it's always great to be educated of what's going on the global picture, national picture, and everything. But
don't be terrified.
Yeah, don't be. There you go. Don't be terrified.
There you go.
That's a great way to close the segment.
Word of the day:
tariffs, sheriffs, interest rates in Paris. Demand still popping, prices aren't dropping. Warriors in 5. That's all I got.
Drop all I got to say about that.
All right. Well, I got a question real quick. This is a little mustache minute here. So I'm working with a seller, and they're talking about the advantages or disadvantages of paying off $200,000 to their mortgage or to their loan, and then just selling with seller financing to lower the interest rates, get more demand, and increase the price point.
Okay.
Obviously,
So
there's tons of pros and cons with it.
yeah, I mean, yes, they could do that. They could do seller financing. Now, remember, if you look at the capital gains exemption, right? Because if they're going to get taxed, they could do something like an installment sale, where they can
Like a balloon payment.
Well, not balloon payment, but they can do an interest only seller financing, where they cover the financing. You only pay interest on the interest of the mortgage, right? That you're getting from the buyer.
You pay taxes on.
Yeah, I'm sorry. Thank you. You pay taxes on the interest that you're generating off of the seller financing. So that defers some of that capital gains down the road. I mean, ultimately, at some point, you're going to have to pay, Uncle Sam. But if they're looking for ways to defer it, over the next few years, nothing wrong with seller financing. My brother, who lived out in Texas, did seller financing for all of his houses, because out there, people had it because they worked on the oil rigs and things like that. They'd have a high default rate.
Yeah.
So he'd do seller financing, then they wouldn't pay.
Yeah.
He'd kick them out, and then he'd do it again.
And so obviously, if you're doing seller financing, you can't just, the pre-approval process, how do you?
It's up to you.
It's up to you.
Yeah,
you are the bank.
Yeah, you're the bank. So you don't need to qualify them like you would a traditional lender. I mean, certainly there's going to be criteria that I would look for. I would look, how long have you been at the job? Let's take a look at your credit report, right? And can you prove your credit?
But although you're generally not going to finance 100% of that purchase, right? There's generally going to be a loan behind there as well.
And so who takes that loan? The seller takes the loan? Or the buyer?
No, generally speaking, a seller's not going to finance 100%. They might offer up 10%, 20% of the purchase price, right? Or maybe even 50% of it. It depends on what their financial situation is. What Dave was talking about, like the installment sale, allows them to kind of do their own 1031, scenario where they're just deferring the taxes down the road.
But yeah, doing like seller financing, maybe the way your clients are thinking about it, where it's like, hey, you know what, we're going to pay off our loan so we don't have a mortgage. Our house is worth $1 million or $1.5 million. We're going to find a buyer. Well, the buyer still may only have 20% to put down.
Right.
So is that seller willing to carry 80% of the value of the home?
You don't want to do that.
Or do you tell them, hey, go get a first mortgage at 40% loan to value, and then I'll cover 35%. So now you got 75%, what's called CLTV, which is combined loan to value. Buyer puts in 25%, and then that's how you structure the.
So let's say that buyer then, just devil's advocate, can't afford the mortgage anymore. He defaults on it. Who's foreclosing on it? The owner or now the bank?
No, the owner's going to foreclose on theirs, but they'll be in second position, so they're going to automatically take over the first loan.
Okay.
Unless the seller finances 100%, which I never recommend, they won't be in first position.
Well, and also keep in mind, this might be getting into the weeds a little bit, but we saw a lot of this.
Might be getting into the coal mine a little bit.
We saw this during the REO and the short sale days. So if there's a first and second mortgage, right, and that first defaults, right, and say that first lender forecloses, that second gets wiped away.
Yeah. Okay. First is the best position.
Yeah.
So would you recommend or not recommend seller financing?
It depends on their situation. I don't have a problem with it, and if it makes their house more attractive. But just keep in mind that interest rate better be lower than what the going market's going to be.
Yeah, there has to be some sort of advantage.
Yeah.
Right. But also they have to understand the risks involved if they do go in second position.
The answer is that's where you just got to. Everybody's situation is different. Can they afford to do it? Does it make sense for them to do it? Is there enough equity to manage their position down the road? Because if they're going into retirement, they don't want to have to get into a big foreclosure thing where they're over, on the house that they used to own for themselves.
That makes sense. All right. Well, should we end on the canary?
I think so. Tweet. There you go.
Well,
canary in a coal mine.
I'm not the only one who doesn't know what this means.
Okay.
It's unbelievable.
What is it?
Wow.
Okay. So you know what
She doesn't even know what a canary is.
Yeah, what is a canary?
So you know what a coal mine is?
Yes.
Yeah, you know what a coal mine is? People would, dig, mine for coal, right?
Working it.
Coal is a source of fuel.
You don't know that song either, huh? All right.
Okay. Coal miner's daughter? No. Anyway, so it is a form of fuel. It gets mined. People used to have to dig with, picks, shovels, all that good stuff. Well, those mines, the deeper they got, the coal would generate a toxic gas, right? That would kill somebody if you spent too much time down there. So what they would do is they would get a canary, which is a bird.
Yellow.
Yeah, usually yellow bird. And they would send it. Little bird. They would send it down to the coal mine, right, as far as it would go. And if that canary died, then they knew that the gas down there was at a toxic level. So the canary in the coal mine is that leading indicator that there is trouble.
So you don't want to be a canary back in the coal mine.
Holy moly!
So that's why there was a whole gaggle of what's a
what?
Gaggle?
A gaggle of birds. There was a whole bunch of canaries that they just purchased because Trump's opening up the coal mines again.
Oh,
So the
there you go.
canary is the Gattos
And yeah. So when that dies,
There you go.
it's time to get out of coal mine.
Okay. Just out of curiosity, the bird had no other exit besides just going straight.
No, it was in a
mine.
cage. It's in a
mine.
cage. They would take it in a cage.
Yeah, but it's in a mine.
It's not like flight. They didn't
There's
have a
only
train.
one way into the mine because you continue to
So I'm
dig.
saying, so they just let it rip.
They let it rip, then he died. Then
died,
they know,
they get the
hey,
hell out of there.
Yeah, because they were more sensitive to those toxins than humans, right? So they knew, hey, if the canary's going to die, if we spend enough time down there, we will eventually die.
So that's the history lesson for the day.
There you go.
Dude, that's crazy.
Unlocking Silicon Valley, one canary at a time.
All right. Oh, I love it.
All right. Thanks, guys. See you
Don't
next
be
time.
terrified.
Later. Don't be terrified.